Today, we're digging into something huge, a massive shift that's shaking up our cities and, honestly, our entire way of working. We're talking about the great office transformation. And look, this is a story that affects pretty much everyone, whether you're back in the office or you've decided commuting is a thing of the past.
So let's just get right to it. You've probably noticed this yourself, right? You walk through a downtown business district, you see all these gleaming towers, and you just get this feeling that nobody's home. It begs the question, why are so many of these offices still half empty? That's the core mystery we're unpacking.
And the answer, really, it all comes down to this fundamental push and pull. On one side, you've got employers. They've poured billions of dollars into real estate, and they understandably want to see people using it. But on the other side, well, that's us, the employees who've spent the last few years proving we can be just as productive, if not more, from our kitchen tables. This power struggle is what's fueling this whole revolution.
And let's be really clear about something. This is not just some temporary blip. We are living through what the experts are calling the Great Office Reset. This isn't about going back to normal. It's a deep, fundamental shift in how we even think about what an office is for.
So here's the crazy part. Even with all the return to office mandates, the reality on the ground is that the buildings are still not full, not even close. This is creating a massive financial headache for companies who are stuck paying rent on, well, ghost offices. We're talking millions and millions of square feet of space just sitting there, underused.
But, how bad is it really? Let's stop talking in feelings and start looking at the cold, hard data. Because the numbers, they tell a fascinating story. It's a story of a market that's literally splitting in two. It really is a tale of two markets.
First up, just look at this number. The national office vacancy rate is sitting at around 19 to 20%. Now that might not sound like a lot, but to put it in context, that is the highest it has been in over 4 decades. We haven't seen this much empty office space since the 1980s.
And what about the offices that aren't vacant? Well, they're not exactly buzzing with energy either. Even on the busiest days of the week, the Tuesday, Wednesday, Thursday peak, occupancy is only hitting about 60 to 70% of what it used to be. And on Mondays and Fridays, forget about it. It's often less than half.
So what are companies doing about it? They're voting with their wallets. As their old expensive leases finally expire, they're making a huge change. On average, they are cutting their space by a whopping 25%. They're basically saying, we just don't need all this room anymore.
And this chart, this really shows you the most important trend happening right now. It's what everyone calls the flight to quality. Those brand new, top-of-the-line, amenity-filled buildings, the Class A properties, they're actually doing pretty well. But the older, less exciting Class B and C buildings, they are in serious trouble. The market isn't just taking a dip, it's cracking right down the middle.
Okay, so if companies are taking less space, but they're willing to pay top dollar for the right space, what do they actually want? What does the right space even look like now? This brings us to the new rules of the game.
First off, the whole idea of your desk is kinda over. The old model of one person, one desk is being replaced by something called activity-based working. The idea is simple. You don't have an assigned seat. Instead, you pick a spot that fits what you're doing. Need to focus? Grab a quiet pod. Brainstorming with the team? Head to a collaborative lounge area. It's all about flexibility. And the building itself? It now has to be worth the commute. The new must-haves are all about creating an amazing experience you just can't get at home. We're talking things like advanced air filtration, on-site coffee bars and food service, tech that actually works seamlessly, and green building credentials that make you feel good about where you work.
On top of all that, companies are getting commitment shy. The days of signing a 10-year lease are fading and fast. The new standard is closer to 5 to 7 years. It's because no one knows what the world will look like in a decade, and tenants are demanding more flexibility to change their minds.
So you can just feel the pressure on the landlords, right? With tenants demanding more for less and for shorter terms, how are building owners and their investors supposed to survive? Let's take a look at their new playbook. For landlords, the path forward is pretty clear, but it's not cheap. They've got 4 main moves. Number 1, invest a ton of money into those fancy amenities we just talked about. 2, take those huge empty floors and chop them up into smaller, pre-built suites that a company can move into tomorrow. 3, give in and offer those shorter, more flexible lease terms. And 4, if your building just can't compete, the only real options are to sell it for cheap or try to turn it into something else, like apartments.
All this chaos is creating two completely different kinds of investors. You've got your opportunistic types, the bargain hunters. They're swooping in, buying up those struggling buildings for pennies on the dollar and betting they can turn them around. Then you have your core investors, who are paying massive prices for those iconic, can't-miss trophy buildings, betting on long-term safety. The absolute worst place to be right now is stuck somewhere in the middle.
Okay, so let's pull all this together. When you look at all the empty space and the falling values, it's really easy to think that the office is just dead. But that's not the real story here. The office isn't dead.
It's being completely reimagined. Let's break down what's a done deal versus what's still up in the air. What's permanent? Hybrid work. That's here to stay. And that flight to quality? Yep, that's the new normal. But what's still evolving? The big questions, like what's the magic number of days to be in the office? And how is new technology going to keep changing how we all work together? The final chapter here? Well, it hasn't been written yet.
And that really brings us to the single most important takeaway from all of this. The entire purpose of the office has changed. It's no longer just a line item on a balance sheet called real estate. It is now a strategic tool. It's a tool you use to attract the best talent, to build your company's culture, and to drive real productivity. So the big question every single company has to ask itself now is, how well are you using that tool?